Hello, I'm Greg Hunter. Thank you for joining us today on USAWatchdog.com. The guest today is Eric Sprott of Sprott Asset Management. They have about $10 billion under management. Eric Sprott, thank you for joining us on USAWatchdog.com.
Greg, I'm very happy to be here.
Well,
Looking forward to your questions.
Well, here's what I want to start with is that, I've been on this, on the internet since 2009, and never have I heard so many important people talking about financial calamity, chaos in the markets. I heard you say that the financial chaos in the markets. Now, the first question right out of the gate is, do you think we are headed for some sort of financial calamity, some financial meltdown?
Well, I would say, Greg, we're having a financial calamity as we speak, right? There's not hardly a week or 2 weeks go by when some government somewhere in the world doesn't have to initiate some program to save the bond market, save the banks, save the economy. We've been going through this since '08. Well, really, it's in my mind a function of a breakdown of the banking system. That's what I believe it all falls back on. That we ended up with over-levered banks. And the sovereigns try to bail out the banks, and because they are trying to bail out the banks and people don't want to buy the sovereigns and their interest rates go up, then you got to get someone above the sovereigns and the banks to try to bail out the sovereigns, which is the Fed and the ECB and the ESMs and the EFSF and all those other things. So it's just an ongoing financial kind of domino effect that we're going through.
You have been one of the best money managers since the 2000s, one of the best in the decade of 2000 to 2010, and I'm sure one of the best right now. You've gotten 20% returns. You've done way better than Warren Buffett. And Warren Buffett got a giant bailout at Berkshire Hathaway. Let me count the ways. There was, the backdoor bailout with Goldman Sachs. There was the, General Electric. He loaned money to them. Wells Fargo, they've gotten government large nest. American Express bailout in his fund. You could have bought a bag of sugar and beat Berkshire Hathaway, and you way beat Berkshire Hathaway. Now you're investing another $200 million in silver. Why?
Well, we like the precious metals, and we like the precious metals because of all the things that we just discussed, the financial chaos, the weakness of the banking system, the printing of money, the bank runs that have been going on in Europe. And we've liked gold since 2000, since it's hit its bottom. We've been very, very involved for 12 years now. And the first reason we ever got into gold, we realized that the supply-demand situation in gold would change, and was changing, because the central banks were sellers of gold. The miners were hedging their gold. And these things had to change. They just couldn't keep selling, and the miners couldn't keep hedging, and it would change the supply-demand dynamics. And it's changed dramatically in the last 12 years. Gold is about a 4,000 ton a year market, and I can point out readily where at least there's been a 2,000 ton net change in positive supply-demand balances over the decade, when we already thought starting the decade there was a shortage. So I just think the price of gold for that reason has to go up, and all these other economic factors are just aiding and abetting the interest in it.
Aren't people like Ray Dalio at Bridgewater, they have, $100 billion under management, Bond King, Bill Gross, aren't those guys talking about buying physical gold? And what does that tell you about what they think about the financial chaos?
Yeah. Well, in our last letter or some of my interviews, I've suggested I can kind of feel a sea change here amongst the more broadline investment managers, particularly when Bill Gross, specifically in his last letter, the June letter, used the word gold, and of course we used it in the context of maybe we should be buying other assets, physical assets. And when the Bond King goes to a physical asset, I think you can sense some kind of sea change there. Same thing with Ray Dalio, who in his recent letter to shareholders suggested that owning gold would be a very prudent thing to do. So there's lots of examples of people finally coming around to the ownership of gold. Perhaps one of the more interesting developments will be that the Bank for International Settlements and the American controller of the currency are now proposing that it become a tier one asset for commercial banks.
Same as cash.
Same as cash and government bonds. In other words, the highest tier of investment. And they used to put up 50% margin on capital against it. Now there'll be no margin on it. So you can see how we never could have imagined 10 years ago that these things would happen. But now they're all happening because people realize that gold is the asset for safety.
A few years ago, stories started bubbling out about LIBOR, and CNBC and the other business channels just dismissed it. Oh, that's not true. Oh, it's a real rate. Oh, come on, it's not manipulated. Well, come to find out, RBS is the first domino to fall. They paid a $450 million fine. Most of the 16 banks in LIBOR that set the London interbank offered rate, which is supposedly as many is the transaction used as much as $800 trillion in transactions, 500 trillion in just interest rate swaps, and now we find out it's been manipulated.
Right.
So does it look? Is it such a far stretch to realize that maybe other markets such as gold and silver are manipulated? Do you think this pretty much tears the shroud, the veil off this manipulation story, and that, hey, listen, gold and silver markets are manipulated too? And how long do you think they can keep manipulating?
Sure. Well, I mean, I would be in the camp that believes that they're manipulated. And why do I believe that? Because we know central banks don't like gold because it interferes with their paper currencies. And when I just mentioned before, I can see a net 2,000 ton difference from the beginning of the last decade to today in a 4,000 ton market where mining production has not gone up at all. I keep thinking, well, where's the 2,000 tons coming from? And I can only imagine that it's probably still coming from G6 central banks who have to supply that market. And they do it surreptitiously by leasing the gold. And when you lease the gold, it doesn't go off your balance sheet. You still theoretically own it, even though you've sold the physical product. So yes, I think that central banks in the G6 countries have continued to sell gold to keep the price down. And back to your question on silver and silver manipulation, obviously when you look at the kind of things that were happening back about a year ago when silver was at $49.50 and it would trade over 1 billion ounces in the paper market. When we produce 800 million ounces a year in the physical market, it was ridiculous, the volume. And I always ask people, think about the guy who was selling the 1 billion ounces. What was he thinking? Where was he going to get that silver? It's just guys playing with computers. And the guy with the deepest pockets and the strongest computer can affect the price. So yes, I think that they're manipulated. And you asked earlier, why do I like silver? I like silver because they see what people do with their money. So if you, for example, took the U.S. Mint statistics for last year, and you look at the dollars that people put into gold coins and the dollars that they put into silver coins, they put more or equal money into silver as they put into gold, which means they bought 58 times more silver than gold in physical quantities. Well, there's not 58 times more physical gold. There's about, for investment purposes, I think it's about 7.5 to 1 is the ratio. There's 7.5 ounces of silver for every ounce of gold that can be purchased based on annual production. So people cannot keep buying at this rate and not have the price of silver get back to its normal ratio to gold, which is probably 15 or 16 to 1.
Where do you think silver should be right now? Just right now, if there's no manipulation at all, if there's no manipulation at all, where would gold and silver, in your opinion, be right now?
Well, I love the question. Yeah, I love the question because if there was no manipulation, first of all, the price of gold would probably be $2,500. And if the ratio was 15 to 1, I mean, the price of silver would probably be $150 an ounce if it traded at its normal range that it historically has always done. So I'm not predicting it'll be there. I'm not excluding it from being there, by the way, but I'm just answering the question the way you asked it.
Final question, and this is pretty ominous. What's going on in the Middle East? I mean, we have a civil war that apparently the West is involved, supplying arms and supplying at least help. They say they're not supplying arms to the rebels. You have the Russians and the Chinese and the Iranians firmly on the side of the Syrian government. You have Israel telling Leon Panetta last week that, hey, we have the right to protect ourselves and we're running out of time. You also have in Iran the Ayatollah Khamenei saying that we'll be at war within weeks.
Yeah.
Now, if war breaks out, what is your scenario? What happens to the economy? Doesn't it take a cliff dive in about 2 feet of water?
Right. Well, first of all, the economy is already taking a cliff dive, okay? And that's before we hit the cliff, which happens in January of next year. I mean, the statistics are so weak economically, it's hard to imagine how anybody could be optimistic going forward here. And I don't really factor in things like wars in my forecast because they're so unpredictable. But obviously, the specific answer to your question, I mean, if there was something happen in the Middle East, I mean, the price of oil would go crazy, the price of gold would go crazy. Anything physically real would be in demand and in probably in a shortage. So that would be incredibly positive. I don't rely on that because I think that I can analyze the physical data for gold and silver, and I can make a very, very compelling case for owning it. I can make a compelling case that the price has been suppressed. And sooner or later, on the physical side, we're going to win the battle because there's only so much gold that the G6 central banks can continue to sell. And as you will have noticed, there's a lot of non-G6 central banks that are buying all the gold. It's not the G6 central banks buying, it's the non-G6 central banks. And if I was to advise a non-G6 central bank, I'd say, you know what? You got to be buying gold because you see what these guys are doing. They have unlimited swap lines. You know, we have no idea what's going on, but it's just a mess. So it makes every bit of sense in the world that they'd be buying gold.
Eric Sprott Asset Management. Thank you very much for being on USAWatchdog.com.
Great, Mike. My pleasure. All the best.